I feel like I'm winning. You might have been here first, but today was a good day in my world. I gotta have some good laughs. We'll see how many people even show up. Group has been quiet lately. I think people have been having a tough time. Yeah, that's what I like to hear. Yeah, I've seen the RCR. It's been nice. A little sideways action, you know? Nice double top yesterday that talked it, didn't take it, made me sad. Man, who was I talking this Bank of America to? I wonder if they'll be in class tonight. Is that what they did? I didn't even look where we got to today. I bet you people were full port and long above that 95 zone, I bet you. Oh, they're gonna break 6,000. It's gonna happen. Man, this looks like a rough one though. Man, the short every EMA touch all day worked for you, huh? I quit trading like right here. Missed all this, unfortunately. Yeah, you know that one puts a smile on my face. Can't lie though, there's been a couple news stories, and then I gotta say, all this stuff today is the coolest thing Elon's ever done. Love to see Tesla down $70 in the last couple days. Dang, 47 today. Nice. Trying to bounce it though. 72 bucks in 2 days. That's a life-changing short. Yeah, wasn't it the pension fund that sold that? Yeah. And they were like, it's crazy. The United States Pension Fund, they held God, I want to say 8 million shares of Tesla. I could be wrong. Don't quote me on that. But they held a lot of Tesla. And well, but let's be real here. They were regret not taking this sell up here. Look at this Tesla chart. Can you imagine just being a Tesla holder knowing that for for what, 5 years now, you've made no money? Like, look at this. The most epic range ever. Don't get me wrong. Very tradable in here, but like, dude, if you bought shares in on January 10th of 2021, you are break even today. Welcome,
Yo,
welcome everyone. How we doing?
Favorite, how you doing, my man? What's up?
Good, dude. How are you?
I'm good, brother. It's good to
Thanks.
hear your voice, bro. I swear to God.
Appreciate that, man. Dude, that was real nice of you to reach out, dude. I
Yeah, man.
love having you in this class, dude. I love having
Thank you. I appreciate that, brother.
you. Yeah.
Brother, I have a question. So today I shorted Tesla, right?
Yeah.
280 a con, just one contract, and I sold for 20 bucks. This is because the con was too much for me. Like I didn't
Yeah.
want to like risk 280, and then it freaking flies. Is it because I used too much capital? Because I think,
Yeah, you were
yeah,
just too heavy, so you didn't hold. But you also
mm,
need to remember, this is all make believe as far as I'm concerned.
yeah.
Here was Tesla today. What matters? This is how Tesla was trading today.
Hmm.
This
Yeah, that was something
you
else.
got the president's ex-best friend calling him a pedo. So you get that, like, I mean, not to laugh at a very sad situation if it's real,
Yeah.
but this is, I describe it as make believe. It's like we hit that in my, we hit a sick one on FOMC the other day. I don't remember, 1,000%. Don't even put it on the spreadsheet. And I said, I was like, that's just make believe, dude. That's not real trading. That's just luck. Don't get me wrong. Could you have held, and if you were in that contract and properly sized, maybe you could have held a little bit longer, sure. But you just have to remember this is not like trading. I mean, don't get me wrong. Can you kind of can you kind of see that new situation and
Yeah.
say, I should probably short Tesla and hold it, Yes. I actually didn't even look at Tesla contracts, but I gotta believe that they were likely not cheap today. Yeah,
Yeah.
I mean,
Yeah.
500 bucks at the money, 700 bucks at the money on the short side.
Yeah.
So, I mean, yeah, they got the short side IV juiced up to 160% or whatever,
Yeah.
So, I mean, yeah.
And you know what it was, Two River? It was because it dropped so much, right? And I shorted at 280, and I got a 275 put, and I think it was because
Yeah.
of that. Because I knew the buyback was coming. Because I
Yeah.
know
And
it's
yeah,
gonna come.
okay. Had
I
I
know.
known you were shorting at 280, I would have said no. I was assuming you were shorting somewhere up here and you just took
No,
it
no,
down.
no, no. I was at
Nah, yeah,
280,
you
brother.
don't short 280. I mean, even when you really zoom out and look big picture, go back and look at 280. This is where you have to start looking for the bounce on Tesla. Of course, trading technicals on something like this, I'm not gonna be the one to tell you to buy calls. That's not, I mean, if somebody's just taking the gamble and they want to risk it and they know the risk, then I'll say go for it. I'm not going to tell you to buy calls, but I will tell you to not buy puts once you start getting down to those major zones.
Yeah.
So if you made your 20 bucks, sounds like you did perfect in my opinion.
Yeah, I saw it and it was moving. So if I knew if this shit pulled back, I'm
Yeah.
gonna be deep red. Like it's gonna be red, and I don't want to be red. I'm already up on the port,
Yeah.
so it's
And
like,
even look at this. I mean, what, 273 to 288 in 3 candles.
yeah,
So
yeah,
I mean, when you got a $16 bounce in 3 candles, I mean, yeah, that your puts are dead off
yeah.
that. Rudy, how we doing? Rob's, nice to have you. Crashmas, Kev, what's up, everybody? How we doing? How we
I
doing?
guess
But
I guess only 14 of us stayed safe from all the mayhem today.
Dude, I
yeah,
was
man.
I was gonna do a different class tonight, and literally 30 minutes before class, I was like, I'm doing a Q&A. I don't think very many people are gonna come tonight. And so, I mean, what a great day to just, talk. And like I said, I got a couple things to talk about, but we'll open it up to you guys. Maybe we go an hour, maybe we don't go an hour, but I still want to at least chat with some people. But give me 1 second. I gotta make one more post soon. Yeah, dude, Lambos knows. Lambos knows well, no, I was doing some early classes, but my first real classes were Friday Q&As, man, and there was 14 of us on average. Give me 1 second.
Keep Norvin out. He's just
My
kidding.
guy, dude, I love that guy, but oh my God, he's such a pain sometimes, dude. He
Norvin,
took
man, he's
400.
passionate. He's very passionate guy.
My
I
guy
like.
took 400 trades in one day. I'm like,
What?
dude,
What?
Norman, no, yeah. But
400?
don't
I
worry, he'll come
never
up
heard.
and he'll be here and I'll be like, oh, River, can we look at CoreWeave? Should I buy the dip? And I'll be like, I still don't know what this company is, bud. Okay, sorry, let me get this post. Uh,
Yeah.
a second. Look at Lulu. Why?
Yeah, bro.
Okay,
Lululemon went
okay. I
crazy.
I
That,
100% I apologize for saying why, and I went and I completely know why you just told me to look at Lulu
yeah,
earnings. I
Lulu went
guess I
crazy.
take it.
Look at that fat ass candle, bro. Look at that.
Wow,
Yeah,
dude, they barely missed,
should have swung puts, bro.
This one.
dude.
Yep.
Dude, they were estimating an EPS of 2.6 and they hit 2.57.
Oh my God. And they caused that reaction?
I don't know. I mean, let's be real. This company has to be getting just demolished by tariffs. Like, this is not made in America, right? I mean, I don't know. I guess I'm making an assumption here, but I think it'd be crazy to think that they aren't making it all in China.
You know what's so
These are
crazy?
dude,
You know
these
what's
are
so
sick earnings, dude.
yeah.
They beat on sales. What? I got to read about this. Thank you. Whoever brought that up. Ahmed, thank you. I appreciate that. And I apologize for saying why.
No
Um,
worries.
I know why.
Dude.
Wait, so where's that? We need to get the 4-hour chart. I'm
River, did
sorry.
you short Tesla today?
Dude, no, no, no. Dude, I wasn't here all day. I got mad. I got grumpy this morning and I just dipped out. I didn't like what was going on in voice chat, so I just left. Wow, look at Lulu. That's sick. Thank you for telling me to look at that. But no, like I said, so I was trading today. I made it an hour into the day. So I left like right here. This is where I quit trading. And then I was working, I was building stuff outside and working on a fence and making a fence and blah, blah, blah. And then I started like getting messages like, are you seeing what's going on? And then I just glanced and saw Tesla at 300. And then when I looked at when I was done working today, all of a sudden I was like, wow, Tesla's at 280. No, I wish I would have shorted it. I mean, it was an easy short. You guys know me 90% of the time, 99% of the time, I'll tell you, don't chase on news, blah, blah, blah. Today was a day where like short it, understand it's high risk, stick with it. And as those tweets keep on rolling, you stick with the trade. You know, it was one today where like I'm not gonna tell you to chase news, but it was one that worked out. The only trade that I am sad about, I took a short on Hood like right here, made a couple bucks, and then I shorted 76. So whenever this was really my last trade of the day. And then I stopped out right here for like, I don't know, a 12 buck loss or something like that. No big deal, you know? But then I stopped out right here just to later in the day see the contract's $3 in the money. But it was just one of those, you know? Dang, the 300s or 340 bucks on Lulu, I take it. Wow. Yeah, but like, dude, buying a what? A 15% out of the money, 12% out of the money. That's just, I can't, dude. I just can't. Just can't. And this still doesn't make sense to me. I can't wait to read this earnings report. Okay, well, with that, welcome everybody. So happy to have you. Tonight, we're doing just a little Q&A. Dirty River, thanks for coming. I'm gonna talk about a couple things. We're gonna look at some
River found an Epstein.
Dude, dude, you guys are getting me laughing today. Thank you. And so I got a couple things I want to talk about. We're gonna look at some charts. We're always, I always got to start with charts. Look at our spies, look at our keys, look at IWM. A lot of people have been trading that. Viral, how you doing? Happy to have you. That was funny. A lot of people have been trading IWM, and so want to talk a little bit about IWM today. It is just like it's the safer, easier, sometimes more fun trader than SPY and QQQ. You know, SPY and QQQ, they'll give you $3, $4, $5 in a day, pretty frequently. IWM will give you about $2. So when you're wrong on IWM, of course, it can give you more on big days, but if you're wrong, it's a lot less pain than it might be on something like SPY or QQQ. So I want to talk about that. And then just, get our bearings in the market. I think it's always important to look at look at the big picture. A lot of people quit looking big picture. Me and Burnt Peanut were talking about it. I'm sure people were piling in long looking for this explosion right here. And this is like, to me, as I look back at the charts, and I guess I should just go to SPY. But as I look back on the charts, I 100% without a doubt can promise you, if I was trading, I was short right here today. That's how I trade. Big picture. You don't want to be long at 599. Can you bounce to 600? Sure, maybe, but you give me a nice little setup like this into a big 599 level, I'm short right here. Does it turn into a disgustingly lucky trade? Yes, but none of that matters. This is short. And I'm sure, like, I bet if we went back to the trade floor and we looked at 1150 to 1155 East Coast time, people were piling in long, and this is a short that I would have taken every single time, and then I would have sold it like right here. Don't worry, I would not have held to 591. I probably would have been out right here, but I'll short this every single time. But so with that, like I said, Dirty River, happy to have you. A little Q&A. We're gonna look at some charts, then we're gonna talk about some of the data that's been coming out recently. Happy we got Crashmas in here. He's somebody that I talk about the data with on occasion, and so we're gonna talk a little bit about some of the data, not the specific numbers, just sort of what's been going on with them. And then open it up to a Q&A. Yeah, there you go. And so I should say, no problem, NYC. That's fine. Like, we've all done it. I longed the highs just the other day. I longed this the other day. This one yesterday. Maybe I was a little lower. I think we scalped a couple bucks out. Sometimes you long the highs and it's just what you do, you know, because it makes sense. So don't get down on yourself. If you ever hear me being mean to somebody or saying something like that, we've all done it. You know, I'm not being mean. I'm just being honest, you know. That's it. But so like I said, some data and then Q&A time with all of you. Like we only got 20 of us in here. If anybody wasn't in here when we were first starting, what I was saying was that you know, after crazy days like this, and especially with the group has been a little bit quiet lately, other than Norvin, the group's been a little quiet lately. Kind of had a feeling we were going to have a smaller class tonight, and so wanted to do just a nice little group discussion. Maybe we go another 45 minutes, maybe we don't. It's kind of up to you guys. But with that, let's check out some charts. And as always, I like to go to a blank one. That's always what I'm going to do. Anytime that I want to look at the market big picture and actually get a read of what's going on in the market, look at the price action of the market, I personally always like to start with a blank chart, and then I just redraw support and resistance. You know, get my estimates up there and really get an idea where we are. It's, you know, how, you know, this is a prime example of when this was going on. People thought I was a little bit crazy. I was describing this as extremely bearish price action, even though we were trading at all-time highs. And this is something that you identify on the big time frames. And so anytime I feel like I maybe need to get my bearings, I'm always going to go to these daily time frames, you know, and just look and think about where are we trading. And the reason you do this is so that you you don't get into those exact situations we were just talking and joking about a little bit. You know, you don't want to be the person buying calls at the highs. You don't want to be the person buying puts at the lows. You know, it's not a successful way of trading. Is there times where buying the highs works? Absolutely. Is there times where shorting the lows works and they're no longer the lows? Absolutely. Most of the time, it ends up being a total failure. That's kind of what was going on in voice chat this morning. And so it was one of those times where bad decision making worked out really good for those people, but I don't trade like that. I think that's not smart to trade like that. So I try to explain them, look at these daily time frames. And so anytime I want to know what's going on, I always take note of my major SMAs. I keep it super simple, 20, 50, 200. So obviously dark blue is the 20, the salmony colored one is the 200, and then we still got the 50 SMA way down here. Obviously, when you get a massive pullback like that and you get all these crosses, very oftentimes it takes a while for that one to catch up and get back over the 200. But we have to view these as three of the more major levels on the chart, no matter what. You know, these aren't the levels that you want to be short into. If anything, they're the places that you want to be looking to buy the dip as best you can. So beyond those, I just look for my major highs and lows. Anywhere that we have set major highs and lows, obviously we got a pretty major one today, of course, news backed. I want to take note of those and think of them as sort of, I don't want to say my no trade zones as much as get out of directional zones. So if we're buying up, as I said, you know, I just grabbed these, you know, some of these levels from back here. As we're buying up into things like 599, blah, 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 stuff like that, you know, these previous highs that we had over here, or 600s, obviously, that's not where you want to be long. So this is where we care about the market right now. Is there more levels in here? Yes, but when I'm doing something like this, I always try to just keep it super simple. And you know, can you put these levels on your chart and go and trade them tomorrow? Absolutely. You can see that there aren't very many. You can see that there's bigger level, you know, there's some big gaps in between them, blah, blah, blah. So, you know, maybe you aren't going to be scalping, but nice day trading or swing trading off of these levels. But I use this to get my bearings. And so we see our big 599, 600 zone right here. Then we go to the left. And we say, oh, and because technically these came from the left over here, we start to say, how has this performed? And we can see it stops the market dead in its tracks. When it gets over it, you can get a nice little pop. But when it gets under it, it gets clobbered. It stops it. It stops it. You get over, you get a pop. You get under, you get clobbered. You get over, you get a pop. You get under, you get clobbered. You see what we're doing here? We want to confirm that this makes, that this level makes sense. And so we can basically look right here and say, anytime we're pushing up here, our 598s, our 599s, our 600s, we aren't long. It doesn't mean don't short. It doesn't mean short, but it means don't long because the risk reward just isn't there. You're pushing up there to the 598 and you're getting long. Well, your stop's got to be below 595. And you're only looking for $1.50 up and $4 down is your risk. That's never going to work out for you, And so this is how we identify those things, and we look for those bounce points, and we always get them off the daily time frames. We look for our major highs and lows, and then we trade these levels. So if we go into the day and we look at our charts, like I said, this is just quick view. We want to see bouncing where we think that bouncing should be occurring. If we break down, we want to track to the next level. You don't necessarily want to expect a $5 drop, but we want to track to the next level, look for bounces up. We get above it, we start looking for breaks and retests, keeping it super simple. As long as we're staying above these levels, maybe you stay in dip buy mode. We push up to them. You don't get long here. It doesn't mean you get short here. It doesn't mean you get short here, but it means that you start to be very, very cautious long here. And until we can get some sustaining above it, as we had for a couple of recent days, we see our levels that matter. We're dip buyers down here. That, maybe it works, maybe it doesn't, but we want to look for bounces in the market as long as we're above those levels, or we want to look down for breakdowns in the market as long as we're below those levels. So it all comes down to just getting our bearings. And so for me right now, a nice pullback, might be a dip buyer tomorrow, but until we're above 600, I'm not super bullish. There's no reason to be overly bullish on this chart. Is this very likely the most bullish move you will ever see in this short of a time frame? Yes. Is this one of the more bearish moves you will ever see in a very short time frame? Yes. So no denying market, strong uptrend, blah, blah, blah. You don't have to be bullish at highs. Especially you want to see those highs broken to actually look for more upside. So as I said on SPY, I really started to become interested in dip buys down here, 577 area. Well, why 600? So multiple
What up,
reasons.
River?
How we doing? So multiple reasons, but you like that, Cassius? Multiple reasons, but right back here. Look at what went on back here. Very big sell. Am I saying that we sold $17 because we hit 600? No. But it's kind of where we stopped. So we get the nice pullback, then we just consolidate. You can call this 600, Sometimes levels are right on the money, sometimes they're 10, 20 cents off. You can just call this 600. When we get these pushes up into this zone, it's just not where we want to be long. In fact, the shorts work better. You get the break and the retest, fine, long it. You get the breakdown and the retest, short it. You get the breakdown and the retest, short it, But not only is it psychological, but it's one of those times where a psychological level also offers a lot of technical backing on it. It won't always be like that. There was a time where on SPY, 500 was nothing more than a psychological level. And as I recall, the first time we went through 500, we blasted that thing and didn't even look back. So when you have technicals backing up psychological numbers, always going to be worth noting. So that's SPY. So like I said, I'm a dip buyer when the dip is presented.
Yeah.
Barring any crazy news anymore.
Quick question, River. So, since we get a little dip today, will you assume going long on QQQ at the 520 range since we had a little
No,
pullback?
we're gonna get into QQQ next. Norberto, hold your horses.
Banker boy in the house.
Oh my God, Norberto boy. Okay, so let's see. There's our blank. So QQQ. I know. This guy, dude. What are we gonna do with him? So QQQ. We start looking at QQQ. We want to do the exact same thing. Of course, take note of our SMAs and where they sit. I meant to say this on SPY as well. When you're putting levels on QQQ or on SMAs, remember that they move every day. So what is 483.23 will not be 483.23 tomorrow. I'm putting them on here for nothing more than reference points to show you what to do. Then as always, we go back and we mark our highs. We want to always take note of any major highs that we have. Anything that's not marked, SMAs have me lining up nice right now. And then we want to get some of these big major lows that, you know, provided us big bounces, that kind of thing. That's what we always want to take note of. And then even some of these nice rejection points right around here, where we took big sells, you know, this was that real bearish price action, you know, post elections into the beginning of the year where we sideways and sellers wanted to, I mean, you can look at the volume and just see it. Sellers wanted to just crush the market here. And ultimately they did. And then anywhere, nice bounce points. So
River, quick question. What's your favorite phrase?
what's my favorite? What?
Your phrase.
My favorite phrase?
Short tops, long bottoms.
Yeah, short
Or-
tops, long bottoms. Yeah, choo choo. That's another one. I love the choo choo. Polar Express. So QQQ. What am I looking for on a pullback? Obviously, nice little pullback right here that we had. I mean, you can't call it little. It was a healthy pullback today. No denying that. This is kind of what I'll be watching going into tomorrow. QQQ sitting very similar setup as SPY. Not overly bullish up here, you know. Did we have the like perfect level rejection like on SPY? No, but not overly bullish as we push into all-time highs. You know, triple top all-time high would be so classic to try to catch that, you know. So
What's your
not
triple
overly
top
bullish.
target? 540?
No. I gotta be honest, we hit it 535. I would have been shocked if we made it past 535. I guess we didn't quite get there today. Oh,
I
maybe
think
we did.
over 545, then 550, and then obviously we go in
Yeah,
euphoria,
maybe.
right?
Yeah, but I mean, so you're gonna, yeah, second part of this lecture is good, will be good for you. So, this is what I'm watching on QQQ. Going into tomorrow, we're gonna have a nice candle. It's gonna open very close to this trend, very likely somewhere, I'm assuming, and barring more craziness overnight, which we could very well get, we will very likely be opening between 523, 526, somewhere in that range. So we'll be right at this trend. It will give us easy trades tomorrow. Maybe we're dip buyers at this 525 as we sell into the trend, and that's what we get. Maybe we break that trend and we get a little retest on it and we flush it down to 522 and we stay short on there. So this trend to me really going to be my line in the sand. I could pull up my more major QQQ chart with a few more levels, but this trend is what I care about. We're starting to see, as we know, you know, this has not been a Mag 7 led rally. Do we have some names putting up nice moves? Obviously, you know, your Microsoft's pushing back towards all-time highs. AVGO setting a new all-time high. I think it was AVGO. Maybe I'm thinking something else. But we're getting a couple new all-time highs set. But we got Apple down 20% still, you know. Google still smoked. And so this hasn't been the Mag 7 led rally. Some of those smaller names have been doing it. Well, that's good and bad. When the Mag 7 all start performing, because obviously some have done very well. Netflix is insane, you know, so some have done very well.
Yo,
When we
River,
start
can
to
I
get,
say something about you were just saying
no,
about
dude. So we you know, some have been performing very well. As a whole, we haven't seen a ton of piling into the Mag 7, which kind of makes sense. Many of these other names have been super beat up, so it's worth it to the money to roll into those. You know, AMD's one, still absolutely smoked, putting in a real nice reversal off that low. I mean, this thing hit 76 and we hit 120. Like, I mean, this is a really good one. And so, you know, nice reversal, things up almost 100%. I mean, I guess what, probably 70% off lows. So we've seen some nice moves from some of these smaller names. Well, when we go to QQQ is not breaking all-time high until the Mag 7 start participating. That's my stance on it. I could end up being wrong, but until we start to see some really big days, like, you know, Apple not looking good, Amazon not looking good. We need some, and don't get me wrong, 160 to 210 is great, but still a long ways off those highs. We need the Mag 7 to really start participating for us to get this breakout to, not saying we won't set a new all-time high, but to actually get the breakout and keep going, we're going to start to need to see participation from those really big name techs, is at least how I'm viewing it. So again, going into tomorrow, I'm watching this trend. If we can, pull back into it, 23s, 25s, hit that trend wherever it lines up being, I'll probably try to catch the bounce. If we break it with some force, I'll be looking for anything to short that thing back down. I'm not saying the market is reversing. You can't be overly bearish on the market, regardless of what we're going to talk next, because the technical setup is bullish. That's all there is to it. So if we short this, we're looking for pullbacks to buy. And my first real point of interest on a pullback to buy is likely going to be wherever this 20 SMA lines up, 515, 516, 514, whatever that zone down there is. That's where I'll be looking to be a dip buyer on it. Will that be a trend break and blah, blah, blah? Of course. But if we can get, a couple of days of selling on some news to give us a dip buy, we're looking for, we can look for a bounce, at least in my opinion. And so that's really the first place I'll look to buy it. And then if we pull, and I'm not, again, I'm not bearish. I'm not trying to say anything like that. We pull back to this 500, catch like a 500 to 505 zone, catch this like triple bottom down here. I'll be long there. No questions asked. Risk reward is phenomenal to get long anywhere down here as we push towards 500. And really stops under 496.80, that 200-day SMA, which is really just likely another entry. But that, 503, 504 zone and 500 to 497 zone, that's where I want to be a real dip buyer on tech personally. Let's see. Yep. Do you watch Mag 7 for SPY? Absolutely. So every day for me, I watch Apple, Amazon, Microsoft, Nvidia, XLF, and XLE. And by watching those names in SPY, you got like, I don't know, 30% of it covered. QQQ, you probably are sitting about 30% of it covered with how they're weighted. So obviously XLF, XLE not really going to affect, I should say, QQQ for the most part. XLF won't. There is no financials in, well, that's up for debate, but there's no financials in the Qs. So yeah, just watch your big names, because that's what people always forget. If you're watching SPY, awesome. But you aren't watching SPY. You're watching 500 stocks in different 498 or something in different stocks and different weights in here. So people always try to say, oh, SPY has a mind of its own. SPY has like the exact opposite of a mind of its own. SPY is controlled by everything inside of it, and the price of SPY is controlled by the State Street computers that are calculating it based on their weightings and their market caps. And so I always watch the big names no matter what I'm doing. Okay, and so like I said, not a little less bullish on SPY up here. No doubt, not rushing into longs on it or anything like that. Definitely want more of a pullback. I do think that if we start to see a more technical breakdown and pullback, SPY will be the one leading the way a bit more than QQQ. But don't want to be super long up here myself. Maybe it's a trend dip today and it was the dip to buy, but maybe it's not. QQQ going into tomorrow, really trend 523 to 524 zone is going to be the zone that I'm watching to maybe try to catch a bounce if it comes, or break down a trend in a retest and I'll look to be short. Maybe final targets 516, something like that, not some huge crater or anything, and so with that, we're going to skip IWM. Just got into a let's see, is there possibility SPY below 592.60 weekly support? Are you swinging puts viral? Is that what you're telling me? Oh, well, it's at 593. It was probably under 592.60 today. It was at 591.13. Did you short this and swing it? Or did you like short this and you're hoping it gets under 592.60? I mean, let's be real here. It was already at 591.30 in the after hours. I think that the movement of SPY is going to really, really depend on who tweets what tomorrow.
That is very true.
Yep. River, what's your thoughts on HUD? Well, that's hard. It's a super tough answer. I was super bearish on it all day long. This, People think it's getting put into the S&P, and like I'm sorry when anybody says that, and I don't care who it is. I don't care if you think they're the best trader on the planet. When somebody tells you that they think something's getting added to the S&P, it is a 100% guess. That's it.
Yeah, I was
It's
about to ask that.
yeah, nobody knows. And so when somebody says it could happen, oh, there's rumors. Well, you're sharing somebody else's guess. That's it. If somebody at State Street leaks what they're buying, they are fired and will never work in the financial industry again. So when people think things are getting added to the S&P, it's 100% guess. I don't care who says it, it is. And that's just the facts. So I'm bearish on that. I don't think it'll get in the S&P, but I said that last quarter and the quarter before and the quarter before and the quarter before. So maybe fifth time's the charm, I would never be long on something that dumb, that logic, but I would personally be leaning short to say, like, has Robinhood really done, and like, does Robinhood really deserve it? I mean, they just put in Coinbase. And so to me, I think they just put in Coinbase. Wasn't that the news like a couple weeks ago? Like an out of nowhere ad too. If you want some crypto exposure in there, go with Coinbase, not Robinhood. But Robinhood on its own, ignoring all the S&P inclusion and blah blah blah, all of that stuff. Bullish on it, no questions asked. But just not bullish for an S&P inclusion. I mean, maybe it comes, but chasing that is just insanity to me. You loaded 5-foot swings, I had a feeling you did. So you weren't liking seeing this $4 bounce in the after hours. Dude, don't even look at the charts tonight. I mean, a tweet can come out and we're at 599, or a tweet can come out and we're at 580. That's really all there is. Damn, you're on the core weave short. My buddy and I talked shorting it yesterday, and we were talking and we said any breakdown under 150, you got to be short whenever that comes. Did not expect it today. I mean, it was an easy long swing yesterday, but we got bad data, which we're going to get into next. ZS. Zooms. Oh, Zscaler. That's what it is. I thought it was like Zoomscape or something. I think that was an old one. I mean, I don't know what you want from me. It's up. There's nothing I can tell you about this. It's trading at all-time highs. I know nothing about the stock. Oh, it's not trading at all-time highs. I take it back. I just said zoom back. Hasn't been here for 4 years, huh? Ooh. Well. Give me 1 second. That's an interesting one. It is just flying, huh? Give me 1 second. Like I said, I really just tried everything the same. I thought that it was just like way above all-time highs and had no info for us. Okay, let's see. What did we do last time we were here? Well, 292 is the dip buy. Yeah, your 304, 305 to 309 is going to be a bit of a wall. Definitely not where you want to be getting long. Break that 309 and you'll go see through 322 though. But wow, what a run. 160 back to 300. What it did, I'm assuming that's all tariff stuff. Yeah, and then God, wow, nice eye on that. Dell. We talked Dell, didn't we? I haven't traded in a while. Well, we see the level that I care about. This is probably from talking to you. I mean, 117, 120 is really just got to be your line in the sand that you don't want to be long right here. Dips, nice little setup, these nice little pullbacks, these were reasonable enough to buy off those SMAs. But not really my favorite setup. Maybe we bounce this 200 back to like 117. That really nice trade, $6 move on that'll pay you really good. But you just got a nice tight little range here where really for me, I'm like a dip buyer at 108, and I'm a shorter up here, 115, 116.
Yo, River, can you check two tickers for me? NBI.
Yes, so that's what I do. Great question. What am I basing my levels on? So let me get rid of the SMAs. Let's just clear this out, and I'll just say because it's simple. That's why I wish people would chart their own support and resistance. go to your daily time frame like this. And I know, sorry, I'm a few minutes behind on this question. Go to your daily time frame like this. Look for major highs. Some people might call them swing highs. I sometimes call them dramatic highs and lows. Look for major highs and look for major lows. So I'm just going to show you an example. So we're back here. This is old information. This is all back from, this is 2024. So it's information we already have. And all I'm doing is I'm marking these major highs and lows. I mean, there's people out there, only mark your support and resistance on, lines that have 5 touches. Well, I think that's dumb. We want dramatic movement off our levels. So we want to mark the areas where the market reverses, both up and down. I don't care if the level's been hit once or if the level's been hit 20 times. I care that I got a big reaction off of it. That's all I care about. So I just go through any of these major highs and lows, and we chart all of those, and then, all these weird little ones even. I liked those. So we chart all these levels, and then you can see they all came from back here, and then all we want to do, that's a nice one right there. All we want to do is make sure they work. So we go to our shorter time frames, and remember, these are all old levels. You saw they came from over a year ago now. Are we bouncing? When we get breakouts, do we move to them? When we get above a level, do we move to the next level? Do we bounce off the levels where we think we should? And that's how I check all of my, that's how you check your work in stocks. You put your levels on there, and now you start looking left. Are you getting bounces? And, keep in mind, these levels are from a year ago, are you getting bounces? When you get breakdowns, do you get rejections? When you get, breakdowns, do you get sell-offs? Do you bounce these levels? Or when you get above them, do you get a nice move? And so that's how I chart everything. And then I just scan through the chart like this real quick with my eyes and say, are these levels providing me action? And as you can see, I mean, very oftentimes levels will work over and over and over and over again for years. So that's all I do. Nice, you added some Zscaler before earnings, huh? Is that what it was? And when I didn't see when here. Oh, whoa, so you're stoked. Oh, I see now. Wow. Yeah, congrats. I mean, you're pushing up into the danger zone, but that's big. That's big. There you go, Viral. Love it. Love to hear that. Man, have you guys heard of this stock called NBIS? MU Micron, that thing's my enemy. I do trade this one a lot. Yeah, really just getting back to that. Don't be long. I mean, shorting 110, 109, 110, all the way up to 115 on Micron has been free money. I mean, if you, let's see. So you don't even need, you don't need indicators. You don't need levels. You don't need, you can just draw a box. Okay. So this is Micron. This is what it, oops, sorry. I didn't click where I thought I was. This is where Micron trades, all the time. So when I think my mouse is a little messed up. So when we're trading Micron, we buy it for $88 and we sell it for 105. And you rinse and repeat. And then when it gets up here to your 110s or whatever, if it gets up there, short this thing. That's all we can do. I know it has earnings coming. If it finally breaks out of this box, great. But this is all you need on Micron. You long it down here in the mid 80s if it shows up, and you short it up here 110, 115 range. I mean, it's worked for so long now. You just kind of stick with it. And Micron's a weird one. It's a company that should be doing very well. NVIDIA use them, AMD, anybody that needs memory, RAMs, things like that, for the most part, likely using a Micron chip, for a Micron memory chip. So it's a company that should be performing very well, and it does this instead. So not bullish, not bearish on it, just trade it, where do I look at news? Very good question. So I'll show you just real quick. So, well, first I go to trade floor. If I see a dramatic reaction, I go to trade floor because people almost always see it before I do. Otherwise, right over here, right-hand side, live news. That's all I do. You know, that, and here's anything you need. Like, here's Elon tweeting slim, beautiful bill for the win, you know, like those kinds of things, you know, destroy the ring, kill the bill, you know, the big ugly bill will increase the deficit by 2.5 trillion, you know, like all the news you need is right here, typically pops up very, very quickly. The Trump tariff will cause a recession in the second half of the year. Yeah, Micron, classic trading range activities for a year now. Okay, so with that, we're gonna bust this out 5 minutes. I know we've kind of had Q&A mixed in. We're gonna talk some data that's been going on. And like I said, we aren't gonna get deep into the numbers, but we're gonna discuss what we should be aware of on this. So tonight, we're gonna talk just some of the major ones. A good question. Always be winning. I'll answer it. Not important at all. Like it's one, most people don't even know what they're looking at on time and sales. Level 2 can be helpful. You're always in voice chat with me. Ask me tomorrow. I'll show you how to use it. Takes 5 minutes. I'll teach you. I mean, you won't be good at it, but I'll teach you. It takes 5 minutes. It's a piece of cake. And then just turn off time and sales. It doesn't help. Okay, so data tonight. We're just gonna cover a couple of them. First two we're gonna talk about CPI and PPI. We aren't going to get into the numbers. We aren't going to get into that. We're going to talk a little bit about what they are and what they mean. So obviously, CPI, PPI, they're inflation. You know, PPI is for the producers. CPI is for the consumers. So what does it mean? Well, PPI is typically more leading than CPI because that's the producers or the buyers or the things like that. It's not, we're going to get into another one, but it's the people producing it. So I produce something and then I sell it. So I have to buy things to produce things. So that's why it's the leading indicator versus CPI, because I buy and then my prices are affected and then it gets passed on to consumers. That's how inflation works. That's how tariffs works. It's always passed on to the consumer. So the PPI is how much are the producers getting? Are they getting more? Are they getting less? And so we have an interesting thing in PPI. Their inflation, you know, PPI inflation, the inflation of the producers, and so I'm going to say these things, then we're going to have the very interesting headline, is going down. Not many people can explain why, though. It was very confusing to me. People have asked me about this. You know, the inflation for producers is going down. Well, they're also currently getting paid less for their goods. Not good for the producers. But producer inflation is going down. So theoretically, that then trickles down to CPI, the consumers, you know? So the following month, the consumers would theoretically see CPI decreasing as well, inflation decreasing as a whole. Yeah, Aaron, thank you. So CPI is also ticking down. It makes no sense to anybody. CPI for the most part, why CPI is going down still is eggs. Massive egg increase in prices. Now, ignore anybody that told you we imported eggs and that helped or anything like that. We had terrible bird flu. It takes 4 months for laying chickens to begin laying eggs again. So we had terrible bird flu. They killed 50 million birds, and it took 4 months for those birds to start laying eggs. It had nothing to do with importing eggs. It had nothing to do with anything about that. Chickens started laying eggs again. So eggs are coming down. Well, nothing else was. You know, I'm happy. I'm seeing somebody ask about it. Are gas prices sus? 100%. Are you kidding me? We
100%.
have appallingly low barrels of oil prices. Shout out to the Middle East. That's their doing. And our prices at the pump are
Habibi.
going up. And not just, I get that I live on the West Coast. I live in Oregon. I live in a liberal state. We do have gas taxes. My gas is going to cost more than the average person, but gas is going up everywhere in the country. You know, I know that Trump tried to say gas is $1.80 in Florida. Well, then, you know, tens of thousands of pictures were posted saying where, because mine is, you know, $2.50 in Florida or whatever it was, $2.80 in Florida. So that just wasn't real. So gas prices have a little bit of an effect on a decent effect on CPI and CPI and PPI as well, because they can be included when the energy sectors are being included. And oil prices going down. I even said it back in 2022, fix oil prices and fix inflation. And so if you go to these charts, and you go look right back here, your Julys into your August into your Septembers of 2022, well, go look when inflation started to tick down or flatten out. It's right here. All we had to fix oil to fix inflation, and so obviously as oil's gone down more and more, and well, see, summer blend, that's all kind of that's wishy-washy, Norvin, because a refinery cost to refine a barrel of oil is $3 to $5. So, $2 difference in barrels of oil doesn't equate to $1 per gallon difference at the pump. That's us getting screwed by oil companies. But so we got CPI coming down, we got PPI coming down, we got oil down low. So they should be down a little bit. However, nothing else is going down. And in fact, as we've heard from consumer sentiment and many of the other datas that we read, prices are going up on most things, due to tariffs and things like that, blah, blah, blah. Companies are being told to not list the price increase from tariffs. And so it had everybody confused. Well, we got a statement from the Bureau of Labor Statistics, who puts out these things for us: the CPIs, the PPIs, the PMIs, which we're going to talk in a second. They're so understaffed that they are full on telling us that it is not accurate and that they cannot talk to nearly as many people as they used to, and that unfortunately they have to inform us that CPI and PPI numbers will not be accurate. So while this is very unfortunate because they've lost 40% of their workers due to Doge, I believe it's 40%, feel free to double check that. They've lost 40% of their workers. So all of us who had these feelings of how are CPI and PPI going down when things cost more, we were in fact correct, because the numbers are, at least according to Bureau of Labor Statistics. I'm not trying to get all conspiracy theory, nothing like that. Bureau of Labor Statistics is telling us they are skewed, because they can't talk to enough people, they can't get enough information. So all of a sudden, numbers going down that shouldn't be going down actually makes sense. So that's CPI, PPI. Next one, we're going to talk PMI real quick. This is the Purchasing Managers Index. It's not a huge one, but think of it as your manufacturing section or sectors of America. And they make things and they sell things. And this is manufacturing. As we know right now, the administration is heavily focused on, bringing manufacturing back to America. Of course, a very long goal. Not saying I'm for or against it, but a very long-term goal. But we have this interesting thing happening right now where the manufacturing, so, they give you 1 to 100 on this thing, the PMI index. Above 50, things are good. We're manufacturing, we're expanding. Things are getting good, things are getting better. We're making more and we're selling more. When we're under, it's contraction. That sector is contracting. So we actually just had our second month in a row of contracting for the PMI, which means people don't have a lot of confidence in the economy and they don't feel comfortable producing because they're worried they won't be able to sell it. So, while we had this big focus on bringing manufacturing back to America, the manufacturers in America are actually saying, okay, we don't want to manufacture right now because we're scared we won't be able to see it. Definitely an indicator a lot of people look to say strength of the economy, which, as most of us know, there's not a ton of strength there. There's a lot of fear there. So that's PMI. We're seeing contraction in the manufacturings. The next ones that we're going to talk about, I'm going to lump them all together. It'll take 2 minutes, and then we'll have 5 or 6 minutes for questions. ADP, because it's being thrown around. Trump even tweeted about it. I don't think he knows what it means, but ADP, unemployment and jobless claims. So ADP is for the private sector, and it says how many people are they hiring? And the private sector hires a ton of people. Last month, I believe they said it was 100,000 people were hired into the private sector. Well, they revised it, and which is low already. Private sector employs a lot of people. And so 100,000, which was low already. Then this month's data came out and they revised the 100,000 down to 60,000. And then this month's data came out and it was 30,000, 40,000 people. So that's a 60% decrease from an already bad number last month, or well, 2 months ago into last month, April into May, and then May into now. So that's a few things. Government freezes on hiring, things like that, and people just not feeling safe to hire people right now in the private sector because there's too much uncertainty. So next we're going to talk about unemployment. Everybody knows what that means. Unemployment means you're unemployed and you aren't working. That is going up. So not in a dramatic way, 0.1%. I'm not trying, I don't want to spread fear on it. 4%, 4.2% unemployment. Man, if 96 out of 100 people are working, that's pretty dang good. But we always want to take note of the trends of unemployment, and ticking up is not ideal. The other one, jobless claims. We had it, last month, and we had 30 to 40,000 new or more than expected jobless claims this month. So more people are unemployed. People don't want to hire. Our inflation numbers are likely going up, even though they're being presented as going down. And the PMI, our manufacturing industry, is actually contracting. So there is a lot of things not looking ideal in America right now. And so what is my point of talking about all of these? Rate cuts. Because everybody talks about rate cuts. Nobody understands rate cuts. But now we're being told, Trump is again saying, Powell needs to cut rates. Well, the Fed has two jobs: stable prices and maximum employment. If anybody's ever listened to Powell, you'll hear him say that. That's their concern. And what does he mean by that? Well, he means inflation, stable prices. They don't want big inflation because that means prices are unstable. And then maximum employment. Well, we got unemployment going up, we got jobless claims going up, and we have very little hiring in the labor sector. So that means we have a weakening job market, but we also have a weakening economy, and we also have potentially increasing inflation. All of those things actually say that we should hike rates. We shouldn't cut rates. It's 100% without a doubt stagflation. Oh, is that Teak? Were you serious when you said that? It is 100. Did I send you my thing on stagflation? It is 100% stagflation, because stagflation is super simple. Okay, I should not say in any way stagflation is super simple, but it is. GDP down, unemployment up, demand down. So our GDP is down. We saw it was negative. Our unemployment is going up. Demand is going down, and we know demand is going down because the manufacturing sector is contracting. So that shows us demand is down. All of those are recessionary. All of those cause inflation to go up, and that's stagflation. So, GDP is down. We saw that in the data. Unemployment's up. We've seen that in the data. Demand is down. We've seen that in the data. So we're in stagflation. And so what does all of this mean? The next time somebody says rate cuts, tell them to shut up or whatever. They don't know what they're talking about. If somebody is saying we need to cut rates right now, they do not understand rates or the purpose of rates or how rates work or the effects that rates have on the economy. If somebody says cut rates, they don't understand rates. And this goes top to bottom. This is everybody from Teak all the way to the president. If you think we should cut rates right now, you do not understand the purpose of rates. So with that, I'm done yapping. I know we had Q&A kind of thrown in and out. You guys got any questions? Anything you want to talk about?
I got a question.
Yeah, what's up?
You said the Department of Labor board has like short staff, so they don't have the ability to like ask people about prices and stuff like that.
Yep.
But for PMI and or PPI and CPI. But like when you're talking about prices, a quick Google search can tell you the price of anything. An AI question can tell you the price of anything based off a zip code, the average price for X in every single state within seconds.
Yes, but it's difficult to get accuracy, because you could Google, and I'm going to use a random one. Maybe this is the wrong one to use. You could use Google gas in California and get a disgustingly wide array of answers. It might be $5 in Humboldt. It might be $7 in downtown LA. It might be $4.25 outside of San Francisco. So a lot of people don't know this, but Bureau of Labor Statistics, they want accuracy. And so my brother's girlfriend works there. I love to make jokes with her about her data messing up my stock market, you know? They want accuracy. They have thousands of people that they work with. And so, say you own a store, Kevin, and the Bureau of Labor Statistics works with you, you're a trustworthy source. I'm going to call you and I'm going to say, Kevin, how much is your cabbage? And then you're going to tell me how much your cabbage is. And I'm going to say, how much was your cabbage last month? And you're going to tell me how much you were selling cabbage for last month. And I'm going to take that very real, accurate data, not, averaged, like, and you're right. If you Google it, you can pretty well get the answer. That is not accurate enough for the Bureau of Labor Statistics, not to mention when you Google it, there's a very, very good chance that the cited source of the average price is going to be the Bureau of Labor Statistics because that's what they do. They want to know those prices. And so getting those CPI and PPI numbers is a very hands-on ordeal. Are you absolutely right that for us, we can Google it and be happy enough with the answer? Yes. The Bureau of Labor Statistics.
It just boggles my mind that in the age of technology that we live in, where everything is advertised to the consumer a price, right? Like
Yep.
Albertsons advertises the price of cabbage to undercut Kroger by 3 cents on the price of cabbage, to undercut Walmart by a
Yep.
penny on the price of cabbage.
Yep.
How can they not have that data instantly at any given second?
Let's be real here. You're probably exactly right. And it is probably very quickly working to that, going on DoorDash, going on whatever it is and saying like, okay, on DoorDash, okay, I've never used DoorDash, so give me a break if I'm wrong of how it works, but I can go on DoorDash and I can say, I want to buy some cabbage. And the BLS can probably get on the website and see that, but they're one of those government, I don't know if agency is the right word. They need accuracy because people like us get mad when they're wrong. And so they're oftentimes the source. And if they aren't the source, me personally, I question it a little bit more, like Joe Blow telling me he pays 20 cents on cabbage, but then I look in every single store around me and I pay $1 on cabbage. I'm probably not going to believe him. But if, the BLS puts out a report and says, average price of cabbage, 98 cents. It was $1.01 last month. The price of cabbage is coming down. And I should say I am not necessarily a huge government truster myself. But when I see that from the Bureau of Labor Statistics, it's one that I'm probably like, well, they did their research, and the government uses their statistics, and beyond being a government agency, the feds, all the Federal Reserves, all of them look at it. So it's just sort of the gold standard that we use as Americans for those prices, for inflations, for things like that. Do I completely agree with you that in this world of in this world of automation and AI and all of that, they should be able to just pull it up on the computer and they're probably working towards that? Absolutely. But as it stands now, very hands-on endeavor to make it happen.
Sounds like Doge needs to go talk to him.
Well, he did. He fired 40% of them, and that's why we don't have accurate statistics right now. So it's like it's the double-edged sword, They got doged and now they have to come out and say, "Hey, we're sorry." But it's this is all we got. This is all we can do. And so it sucks because, as I said, Bureau of Labor Statistics, somebody I trust. I trust them less now than I did a few days ago since they put out the report saying they're so understaffed they can't give us as accurate of information. Now I have to trust them a little bit less.
Yeah.
Which sucks because they were one that it was like, if you read the BLS report, it was real. Like, not only is it real, you can go and you can see where the information come from. Like, they have so much info in there giving you, these are our sources, this is how it's collected, these are the people we talk to. So it was nice to have a relatively transparent government agency when most of when most of them aren't. You know, when we got courts blocking us getting the documents from Doge to see what they actually did, something like the Bureau of Labor Statistics that is just statistical, they really lay it all out for us.
River, I have a question real quick.
Yep.
So is this inaccuracy going to affect anything in the future? Because all this information is not accurate, right? So would it infect?
We
Like,
can't
our
say it's not accurate. We can only
Yeah.
say it is less accurate.
Mm,
And
okay.
yes,
Or we
because
could say it's accurate but incomplete.
yes,
Yeah, that's
uh-huh, yes, very, very, very good. Yeah, very good. And how will it affect us? Honestly, we might start seeing a little bit less reaction from the market because the market knows, like, oh, well, they're telling us, CPI is, 2.8%. Well, maybe it's 2.9, maybe it's 2.6, maybe it's 3. It's kind of just that, up for grabs thing. My personal opinion, the BLS will be funded again very soon because it's like I can't really express how many people, like government agencies, state agencies, individual businesses use the data from them because it is trustworthy. And so now that the trustworthiness is a little questionable, I gotta believe they're gonna get funded again pretty soon. Yeah, forget NBIS. Let's look at AES. I'm still in there. How do we finish the day?
Yeah.
Oh, what? Dude, I hadn't even looked at it. I'm green, huh?
Let's go, money printer.
Oh
Brr.
my god, I'm probably green, dude. What in the
Damn,
world?
River, you gonna do me like
Oh,
that?
bro,
Tell them who's the
dude,
#1 stock
Crashers,
picker.
we're up 92%, Crash.
Dude, I sold the last one today.
Bro, we're up 92%. I didn't know.
Yeah,
How'd
I'm kind
AT&T
of pissed I
finish up
sold the
today?
last one, but I had to. Well, I didn't get as good a feel as you, but
No, dude, I need AT&T to pop over 28 tomorrow. I ain't gonna lie, I got a little.
River, I have a question with the AT&T. Like with the AT&T, do you use a lot of contracts and it goes up, or is it like
I
because
mean,
AT&T
yeah,
is so
it's
good?
one that you got to think of you got to think of your position size and your percent, not your one contract. Like,
Yeah.
you buy a $15 contract and you sell it for $20. That's awesome. Like, good job. Happy for you. You have to think it's a 30% trade. And if you normally put $300, and I'm just throwing out a number, if you put $300 in, to a normal trade,
Mm-hmm.
that's 20 AT&Ts, so
Yeah.
like
Is that, and
position
if it moves
sizes
up,
need
it's
to
a
be
good,
thought of as
it's a
whole.
good
Yeah,
percentage.
Crashmas, I think your mic is working. Maybe it's been open the whole time, but I haven't actually seen it move.
Yo,
I've,
River, is that what you
yeah.
call low OEI contracts?
Oh, Norvin, I did that by accident. My bad. I was just trying to scroll. I really didn't mean to do that. But Crashmas, I heard you say that you sold them all. Yes, Norvin, they're low OI. They are. But generally when people talk about low OI stuff, it's because of like pump and dump gurus that are buying contracts with no volume, no OI on them. So when you alert it and a bunch of people buy them, the price actually does go up a little bit. Super illegal.
Is
That's
that because
never
of
gonna.
their market cap too? Sorry to cut you off.
No, nope, nothing to do with market cap. It's just how options work. If there's no volume in it and all of a sudden volume starts coming in, you get a little IV increase. You have people buying at the ask. And so, if I buy at 10 and I try to sell at 11 and you buy at 11 and you try to sell at 12 and somebody buys, that's how price goes up. And so when all of a sudden you have, some furu moron pump and dump, fucking hate those people. Pardon my language. Pumping and dumping low OI stuff, it can happen. But let's be real here. You can look at AT&T and do the 25 contracts I'm buying at AT&T are.
Yeah, that's what I was about to say. Sorry, River, to talking so much and so many questions, right? But
No,
Norman
you know,
always wants to take over the show. But so, like, let's say I put $1,000 and I get 30-40%. That's all I'm looking for in the premium OEI contracts on AT&T. I'm gonna get in the
Well,
money, low contracts, they pop 30-40%. I'm out. Questions out.
yeah, pretty much. I mean, that's how I treat it. But don't get me wrong, those things get to run it because you have to remember, you can very oftentimes buy a contract that's slightly out of the money. I'll show you some that I hit
River
recently.
Boy is up 600% and he's still not selling. What's going on here?
That happens on occasion. AT&T is one where it will happen. But just to show you, you know, so AT&T here, these are the 27.5s. And so, and these are what I traded today. So I hit those things at 18 bucks. Oh, let's just pull up the T chart next to it. So I hit those things at 18 bucks. And then you look at this chart and it looks parabolic, which you don't really think about. This is like a 25-cent move, 30-cent move. So big percent, you know, on the stock or whatever, 2% or whatever. These contracts, I mean, I got them. I'm looking. Okay, I got them at 21. So I filled them out on now somewhere right around here, 21, 22. And then I cashed those things at 36 today. So over 50%
Nice.
on
Oh yeah.
on a 25-cent move. And my
No.
risk when I was buying wherever I was buying these things, I was only going to lose $3 or $4 a contract, you know? So I might post this and somebody will say, oh, well, yeah, whatever. You made $12 a contract or $14 a contract or whatever it was. And it's
Yeah,
like,
times a
well, yeah,
thousand.
yeah, 6%.
Dude, that's
you
a
know?
good
And
way of
people will
trading.
and people will sit in swing trades for, you know, people will sit in swing trades for 2 weeks to make 40% and think
Yeah.
that it's somehow better.
Similar kind of to Verizon, right, River? Kind of like AT&T, Verizon, what is it?
Verizon moves a lot
American
more.
Airlines, Chipotle,
Verizon moves more
Coke,
because it's such a more
1K's
valuable.
favorite, Coca-Cola.
Yeah, I love KO. I love
River, you know, I tried that strategy, like the low contract price and with a lot of contracts. And I kind of like it.
Well, yeah, I mean, and
I
I'm not
like
telling you to go YOLO or anything like that,
I'm
but
not YOLO,
but you have to, you know, you got to remember that like position size should be position size. If you're gonna check $600 into weekly Teslas or whatever, maybe buy $600 worth of AT&Ts, you know,
So
or
let's say like you buy $700, $1,000 of AT&T and then it's up 15-20%. You trim 75% of position, no questions asked. You let
yeah,
runners.
yeah, even before that. I mean, I just trim on the way
Yeah.
up, you know, and then yeah, you end up in freebies quick because your contracts cost you 18 bucks.
And your IV doesn't get killed, right?
No, there is like little to no IV. I mean, they don't move much, 30,
And the
30.
contracts are so cheap that you can
It's like
trim
going into
any of them and still have fluff.
SPX or a QQQ, you buy it and it loses 30-40% in minutes.
Yeah, and
Unless
AT&T
you're buying
doesn't.
in power. Like if you're
You lose
buying
$1.
Yeah, but you have to be like clearly on the money spot. You gotta
Yeah.
either bottom ticket or top
I think
ticket or
yeah. I think if you buy in strength and if you do that with SPY, I think you get paid very well, but like it's very risky. But
Yeah.
you have to buy
Well,
in
and you don't want to do it with SPY same days, you know, and
Yeah.
position size is position size. Never think of just, oh, I'm going to buy a ton of AT&T contracts because they're cheap, you know. If you trade $500 position sizes, it doesn't matter if it's Microsoft, it doesn't matter if it's Nvidia, and it doesn't matter if it's AT&T. You trade $500 position sizes. You don't like, oh, well, these T contracts are only 18 bucks, so I'm going to buy $3,000 worth out of nowhere. You know, you don't do that. Like,
Yeah.
if you
Yeah.
trade $500, you trade $500. Teak, good question. There is no way to know. But we can like DM about it a little bit. I don't even like talking about it because I don't support like people doing that. So I hate that it was actually.
yeah. I was gonna mention something about that. Like what would you advise people like that play like same days? Would you advise them to buy the next day or
Yeah,
the Friday
just don't trade same
expiration
days. And
just
you have
for the insurance and that cushion?
yeah, and you have to remember people who like so a 1 DTE versus a same day, you will make the same dollar amount. Like that delta is delta. Like if I have a contract that costs $100 and you know it's a tomorrow and it costs me 40 and I have 40 delta, if it moves $1, I make $40. If you have a same day and it costs you $60 and you have 40 delta, if the stock moves $1, you will make $40. Delta is delta. The only difference is shorter expiration, higher risk. So your percentage is higher. You know, 40% of a $60 contract is 66%. 40% of a $100 contract is 40% or
It's
$40.
just the insurance that you're paying up front for
Yep.
like a Friday compared to a same day or a next day.
You pay for you pay for that safety. What about theta? To be honest, you're gonna have similar theta amounts, you know, dollar wise, but it's the same thing. When you have $5 theta, I'm just throwing some out there, you know, or whatever, $50 theta on a same day versus the next day. Well, $50 is 100% of one of those contracts, and it's 50% of another of those contracts. So theta, market's working toward, those contracts are working towards zero when out of the money. They don't want to go up, they want to go down, they want to go to zero. So theta's hard, but people dramatically, people say, oh, I'm getting theta burned. I've been in this contract for 15 minutes. And it's like, no, you had a bad entry and now you're riding chop and nothing's happening on the contract. But it's important to remember theta. If you see you have $50 theta, then that is $50 theta over the next 24 hours. So the thing that like people don't really ever think about is that you only get $2 a theta an hour. That's it.
Yo,
That's
yo,
it.
Robert, can I can you also like give us some advice on like people playing like out the money or like super like obviously
It's
for an
stupid.
earnings play just for like here and
Stupid.
there, yeah, it's all right, but like if
It's
you're
stupid.
not playing in premiums, like you shouldn't be in the play, correct?
Yes, that's my opinion on it. If you can't afford a reasonable contract, don't trade it. Like I saw people on your stock, dude. Dude, thing was trading like I don't even remember. I think it was back here. I think it was 104, 105, and they're swinging 190 calls with 2 weeks of time. Did they end up working? Yes, but by like you make like by trading something like that, real traders are laughing at you. I'm telling you right now. Like that's not how you should be. Like if you are ever in a contract that is yeah, if you're ever in a contract that is 50% out of the money, you're a moron. That's all there is to it. Maybe it works for you, but it's dumb. I mean, it was
Yo, River, I'm
you
in
had
the
people
Corway
swinging.
50 July expiration. I'm up thousands, bro.
No, you aren't. Oh my God. Okay, and with that, we are calling it a night. Love you, Norvin. Love you, everybody else. Thank you for being here.
Love you, River.
And, we will catch you all tomorrow.
Let's go.
Thanks for hanging out. Yep. Yep. Thank you, everybody. Thanks. That was a good time. We'll talk to y'all soon. Thank you.
River, my man. Love you, man. Take care.
Yep. You have a good one.